Hi friends, good day, welcome back to my YouTube channel. My name is Jaren Ako. Hope everything is going well with you. And in today's video, we're going to talk about another kind of mutual fund, which is the balanced fund. So in the previous videos, we've already talked about stock mutual funds or equity mutual funds. We've also talked about bond funds or the fixed income mutual funds, and I will link them up here. And in today's video, we're going to talk about a mix of bonds and stocks into a mutual fund, and balanced funds are basically of balancing the amount of stocks and amount of bonds in the portfolio of the mutual fund. So the advantage of having a balanced fund is that you are getting the potential returns of stocks or equities and the potential upside of the bonds or fixed income asset classes. So if you are kind of a moderately aggressive investor, then balanced fund may be for you. So balanced funds are invested in both equities and fixed income because typically, the performance of the equities market and the bonds market are somehow inversely related. So when the stocks are performing well, usually the bond market is somehow depressed. And same is true the other way around. The fixed income is running up, sometimes the stock market is going down. But today's environment is kind of special because we are experiencing high inflation rate. So we are in a high inflationary environment. That's why the stock market, if you notice, is going down, particularly in the Philippines, no? But in other markets like the US or the India, the Japan market, the equities market is actually going up. Some markets internationally are even hitting multi-year highs. But in the Philippines, the stock market is still going down. And the bond market is now recovering because of the pause of the Bangko Sentral Pilipinas, which is somewhat benefiting the fixed income market. But in the previous year, the bond market is going down, the equities market is also going down. So that's a special scenario because of the high inflation environment. So where does the benefit of having a balanced fund comes in? Balanced fund is invested in both the equities and fixed income side, which means that you are getting upside from the stocks that the balanced fund is invested in, and you are also getting interest coupons from the bonds that is part of the portfolio of the balanced fund. So that is typically the advantage. So you get upside in either the stocks or either the bonds. And the fund manager actually uses tactical strategy to maximize the potential return of the overall balanced fund. So if they see much potential in the stock market, then they will overweight in the stock side. If they see a potential upside in the fixed income market, then they will shift the funds from the equities to the fixed income. And so there's actually a rule in our law that limits the swing. Basically, you can only invest 65% of the total balanced fund portfolio to a single asset class. So in this case, for example, you can only invest up to 65% in stocks, and the rest, 35%, would be in bonds, or the other way around. You can only invest up to 65% of the total portfolio to bonds, and the remaining is 35%. So that's the typical asset allocation limitation of balanced funds. And there's actually another variation of the balanced fund, which is the dynamic fund. The dynamic fund actually eliminates this limitation. So there's no longer the 65% limitation in one particular asset class. The dynamic fund can go full equities or can go full fixed income. So that is the dynamic fund. And another variation also of the balanced fund is the multi-asset fund. So multi-asset fund meaning that they can invest not just in stocks and bonds, they can also invest in commodities such as gold, copper, and even in other asset classes like exchange traded funds or other mutual funds. And so those are some of the features of balanced funds. I hope you guys got some tips and ideas on that one. And hopefully you can also check the available balanced funds in the Philippine market because it's also actually a good way for you to get upside in both the stock market and the bond market, especially if you don't have really the skill and knowledge to get and to select the particular bonds and particular stocks that will benefit in the full reopening of the economy and hopefully the recovery after all this banking turmoil, the crisis, the recession crisis that is somehow impending in the US, and hopefully it won't materialize that much, that the so-called hard landing. But if ever, then we can tactically position ourselves to more advantageous position, because if you've noticed, the Philippine market is super underweight in the international investment environment. So the Philippine stocks are actually cheap relatively to its historical valuation. So it's actually a good time to accumulate good names in the Philippine stock market. And we can also actually start accumulating bonds because the Bangko Sentral ng Pilipinas has already signaled a pause and a potential decrease in the interest rates in the coming years. So yeah, that's it for today. Hope you guys got some ideas on that one. Comment down your greatest takeaway, and yeah, have a great day ahead. See you in the next video. Bye bye.